Want to find out why right now is a good time to be a buyer? Or if you're thinking of selling, how to get a quick sale? Then stay tuned. Hi, my name is Matt Hawkins, Seattle Realtor with Real Broker, and this is your market update for June 2022. Let's take a look first at Snohomish County. New listings are up 26%. Pending sales or homes that have been listed and accepted an offer are down 6.5%. Closed sales are down 3% from the previous June and down 4% year to date. With a record number of homes sold last year, a decline is to be expected. If we look at this chart for existing home sales for the last several years and projections for 2022, we see that even with the drop in sales, we are likely to end up around the same number of homes sold as in 2019. Days on market is up slightly, but still below last year. The median sales price is up 16.5% and up 22% year to date. Price increases are slowing down, but are still very high at this point. An increase in interest rates will put downward pressure on price appreciation, but we're still a very long way from prices leveling out or even dropping.
It's hot, drop it.
Inventory, or the number of homes for sale, is double what it was at this time last year.
Double trouble tonight.
But we are still only at about 1 month of inventory, which is still very much a seller's market. A balanced market is about 6 months of inventory, or if no more homes came on the market, it would take 6 months for them to sell out. Jumping into King County, new listings are up 12%. Pending sales are down almost 14%, and closed sales are down just about 14% as well. Days on market is still lower than last year and still very low at 8 days on market. The median sales price in King County is up 14.5% to just over $1 million. Inventory is up 56%, up to 0.9 months of inventory. Showings in Snohomish County are down 20% from the previous month and 38.5% from the previous year. In King County, showings are down 19% from the previous month and 41% from the previous year. No surprise here, as a large change in affordability is driving a drop in demand. Even with this steep drop in showing demand, we are still above pre-pandemic levels. Mortgage rates took a big jump in reaction to a larger than predicted increase in the federal funds rate at the latest Federal Reserve meeting after May's inflation numbers were higher than expected.
Damn!
Interest rates have come down slightly from the peak of 5.81% to 5.7% on June 30th. This quote from the Washington Post talks about the difference between the federal funds rate and what influences mortgage rates. The low rates of the last few years were an anomaly, a combination of freakishly low interest rates and Federal Reserve intervention in the bond and mortgage-backed security market. Now the Fed has ended quantitative easing and is raising rates. But what really matters is what happens to the 10-year bond yield, because that determines mortgage rates. Rates are up, and we are likely to see them continue to increase until we see a sustained period of declining inflation. In an inflationary economy, you want to be invested in something that outperforms inflation. This chart here shows how home prices have performed in comparison to inflation over the last several decades. As you can see, home price appreciation almost always outperforms inflation by a significant margin. The exception would be during the 80s, when we were facing large inflation numbers, and the 2000s, where even with the crash, the decade still had positive home price appreciation.
Positive, positive, positive. Up!
Rising inflation means rising prices across the board, including goods, services, and housing costs. When you purchase a home, you lock in your monthly housing payment, shielding yourself from an increase on one of your biggest expenses each month. If you can get into something that fits your needs and wants, you can refinance when rates go down and regain some affordability. Prices of homes go up, and the prices of everything go up over time.
That's crack prices.
While they may go down temporarily, you may not be in a position to buy if and when they do go down. The best time to buy a home was 10 years ago, and the second best time is right now. For sellers, we're still very much in a seller's market. You'll have to adjust your expectations from 20 offers to somewhere between 1 and 3. Get your home in the best shape possible and price it appropriately, and you should still end up with a very quick sale. Remember, average days on market were still right around 9 days last month. You can't time the market or the future of interest rates, so if you're waiting for prices or rates to go down, you may be waiting for a very long time. While affordability is taking a major hit in the short term, hopefully in the long term it will level the playing field once the market is more balanced and rates go down.
Have a balance.
That's it for the June market update. Check out these videos here.